Hello and welcome to the Friday Wrap Up, brought to you by David Gokhshtein and the Gokhshtein News Network. I am your host, Landy, and today is March 6th, 2026. And we are looking at Bitcoin here on the daily to start. We hit the first of the upside targets above the 72.2 region that I had talked about on any kind of a range break, and that was anywhere between 74 and 75. So we have now completed that move and to 74.1. So that's first target essentially hit. Now, I had mentioned on Wednesday that for immediate continuation, we needed to see preferably the 72 to 72.2 top side of this range hold up as support. And it did not. You could even rope in 70,500 there for where the actual close came in over here. That's been kind of defining the top side of this range ever since. Now with the deviation above, Bitcoin is right back into the range. So we are now sitting around that $68,000 to $69,000. If we do see the low from Friday dropped at 725 in this case, now I would be looking somewhere, 65 to 66. So the bottom side right here, this first higher low that was put in over here on the daily on a closing basis at $65,000 to the lower first, somewhere around 66. For the bulls to have hope to hit higher targets, you'd want to see at minimum the close. I would say you'd want to see the close around 65, 7 to 8 hold up on a closing basis. If we're closing under there, we've already likely seen 65 hit and likely lower. But the last higher low for this particular trend, which is an uptrend because we had a lower low over here. And now we have a higher low swing with a higher low close and then a higher high. So this is still an uptrending structure despite the daily putting in the high and coming back and mean reverting back into range. But if we do see 65 drop, that's going to endanger the higher low there at the $63,000 area to that 62.5 low that was a lower low. So essentially what we have here is a little bit of a structure change, but no real completion on that structure just yet. I'd like to see if it's going to remain bullish for another higher low, right? And so far it's just a deviation of the primary range and then a mean reversion right back into it. So we had the last lower low here. We did get a higher high, but not on a close, but this did lead to a higher low on a swing and a closing basis to a higher high. So what you'd be looking for is some sort of a higher low as it relates. So even if it comes down, you'd probably want to see 65.5 to 66 hold up on a closing basis. And then, come back up and try to hunt higher above the two moving averages that are crossing over top, which is very strong resistance right now. As I mentioned, anything to the top side is, just a retest of overhead resistances, right? 74 to 75 being a key area from the first new all-time high that was put in at 73,835 prior to the halving for Bitcoin, and then that higher low at the 74.4 region. So 74 to 75, we've now seen that hit. If this does remain bullish, we'd be looking for some sort of a higher low or some, as it relates to a minimum, the swing low, but for a stronger signal on a closing higher low that can stay above this consolidation higher low that was put in over here, just below $66,000, and then a move back to the highs and above them and through them to hit, the 78 to 80, so on and so forth. And that would involve Bitcoin getting above the 55 period EMA and the 50 period simple moving average here on the daily, and heading up to test overhead resistances, which there's some weeklies and some dailies, right? So we've got 78.5 here. We've got the 76 area, which is a big weekly area inside of a wider weekly zone between 74.4 and 80, essentially, where this higher low came in we've talked about this prior, and I guess I can throw on the overhead resistances here just to illustrate. Um, this is the weekly areas of interest, right? So above that 74.4 right here, there is, mid 70s. So anywhere between 76 to 78, and then 78 to 80 is where we can begin to look. If we were to see higher low structure on a closing basis, you don't really want to see lower low swings with higher low closes. That's usually some bull bait there that ends up poorly for the bulls. But in terms of projecting potential scenarios, that's what the bulls would want to see to try and test further up into the 78 to 80 area. Now, to the downside, it really is all about holding the lows, and or else things drop through to go test. Down to the 58 to 60, which is going to be that higher time frame area on the weekly, right down between the lower second standard deviation at the low at 60 and 58, where the 200 period simple moving average is. If that area is dropped, you'll notice that I do have some areas down here that I'm starting to put back on the chart. This is the weekly zone between 55.8 and 54.8. You can just kind of call it 55. So anywhere below 58, I'd be looking towards that area around, and in between 55 and 58, below the 200 period simple if it does head to the downside. And then, of course, there's 53.5 to 52.5. Those are some weekly areas before getting to the next major area down here, which would be around 48 to 50 by the 377. And you'll note that 48 to 40, that is the one of the key areas. That's the lower high from 2021 into 2022, right? So that's that bear market lower high that was the confirmation. Couldn't set the higher low in a close, and instead turned right around and closed a lower high. And then there's areas of interest below there. There's obviously the lower third standard deviation in the mid 40s all the way down to 42, and then 38.5 would be primary downside targets should things get rolling. I'll be honest with you. I think that we need some more mean reversion. Even if this is going to go lower, I think we need to go higher before lower, or else if we do go lower, I think it would be, if we just consolidated and moved lower, I think that the time to find a low would be very quick. But if we were to see consolidation and more of a mean reversion back up, maybe even if this is it, we're probably going to plumb the lows, and then I'd be looking for spikes down that get bought back up in a very quick manner. But if this was going to turn out like the more bearish scenario, my personal opinion, well, it's kind of would all be bearish, but would be to mean revert higher, get a compression again on the weekly, and then re-expansion through the current lows. As it stands right now, what would it take to set a low? On the weekly, you'd want to see, I mean, this is going to close like a mess. If it closes underneath the 200 exponential here, I would be entertaining that we're playing within the zone between the two 200s here, between the exponential and simple, thus increasing the chance that we see a low. But if we do get back above it next week, and test the highs and possibly higher again, around that 74, 75 area, and then 78 to 80, that's where you'd start to see compression back above the lower first standard deviation on the weekly, and then we await the next larger move thereafter. So a little bit more of a mean reversion is kind of what I'd like to see for price action before heading lower. But if it does head lower pretty quickly, I think the buyback would be strong initially. And then we kind of see how things settle out. Obviously, that's just a theory of how things could play out. The weekly looks as though, if it can hang in this area, we might see a stoke turn on any closes above 63K. So, it's not far off. We're not far off from a signal, or at least an emerging signal on RSI as well. So kind of fitting it into the relative strength and momentum categories as it relates to volatility. It's I think that even if we do head lower, we're probably in for a bigger bounce sooner on the weekly than later. That's not a guarantee, but it does look as though it might want to shape up for that. Otherwise, for at least a real concerted effort at mean reversion on the weekly, and then kind of come back to it. So gave you the upsides, gave you the downsides. It's got to hold above basically 65 and you'd want to see closes come in above around that 66K area to preserve the daily structure, to go and test, 74 to 75 again. And then the possibility opens up for 78 to 80, and then, even mid to low 80s from there. Otherwise, it's to the downside below 65. We're looking, 62 and a half to 63, and anywhere below there, we're looking for a retest of the lows, 58 to 60, 55 to 58, and then the lower 50s to that 55. Keep an eye out this weekend. I think you definitely want to see how things close. This would be ugly if it closed anything like this. So, but it will tell us a lot coming into close on Sunday. And of course, I'll talk to you again on Monday about price action for Bitcoin. And we can kind of evaluate what's going to happen from there. If it does close anywhere above 71,380, this would close the low. It'd be ugly on the daily. You'd still want to see closes above that 72.2 topside structure to start initiating that mean reversion. So, or else it's, just consolidation until we pick a direction from this range. Commodities, gold, essentially doing what we've talked about. It spiked the highs. It hit directly at our targets. 54 to that close open at 54.20. Still playing and consolidating between the upper first and upper second standard deviation, as long as it's holding that low at 48.40. It's playing around in a range here and potential further upside towards that 56 to 58. Anywhere above 54, we're probably looking at that 55, 56 pretty quickly. And then anywhere above there, we can start entertaining 56 to 58 by the upper third. I'll be honest, I don't know how confident I am in that occurring anytime soon, but this is an uptrending structure, so can't fade it. If it does get expansion above, 53, and then especially closes above the 54.20 high here, we're looking at 56 pretty quickly, and on expansion from there, that's where you could see 56 to 58 being a key area overhead. Silver. This is a structure change in terms of a character change on the daily for the higher high. It needs to close a higher low though. And it came right back to, the areas that we had talked about. Now it's stuck between the two moving averages, between the 50 simple and the 55 exponential, and kind of setting up for a range. So back above the highs, we'd be looking for expansion above 96 to, again, 98 to 102. Fair game. Anywhere below the lower first, we're looking to likely head down to the lows, 74 to 75 probably initially, and then heading into possibly test that $70 area. Any expansion below there, we're looking mid 60s pretty quickly, and then down to the 200, likely in the the low $60 region to $260 even. Now, I've adjusted this a little bit just to show you this hasn't changed much from what I've talked about prior in terms of where oil is. But I've gotten so many questions about the outlook on oil, considering what's going on with the conflict in the Middle East. And, I've warned people to be careful, right? Because we're seeing like really, really crazy high side targets. Don't throw the chart out the window, right? Even on the daily, we've come into contact with all the zones that we had previously talked about. And I'll just take from this and throw on the mess of crap that I've had on here before, just to show you, like, the daily played in this area and then found support and then moved up to the next major areas of interest. Lower term timeframes, by the way, taking pit stops at every major area along the way. Down on the 15-minute. But in order to clean that up a bit here, I wanted to present a little bit of a higher term time frame look from the monthly. And I think get rid of that one and that one for right now, because we're inside of a big monthly zone here. All right. And if we see 95 break, that's where we could really start to look, because this would be and is likely going to end up, if it closes anything like this, anywhere above like $82 a barrel for WTI. We'd be looking at we'd be looking at expansion on the monthly, which would lead to higher prices. Right. So this is the key overhead resistance. This is what I've been kind of cautioning people about. Nice gap up, big candle, big character change out of the downtrend, big trend break, everything pointing to further upside. But you still need to be careful in and around these areas. Above 95, we could very easily see, a move, to the 98 to 100 area. This is that. This is the weekly area over here. On a closing basis, 98 to 100. And then above there, the 115 to 130 being a big zone on the monthly. And of course, a very, very, very big area on the weeklies here. So I would exercise caution. Big move. It's still got some juice left. Beware of deviations of 95 as well. So, something like, a deviation that kind of comes up and comes right back down and in. As long as we see, price holding above around 80 to 83.28 here, we're looking to that upside area of interest. There we go. We're looking to continue to plumb the upside here and potentially get that continuation. There's nothing saying that it needs to slow down right now. We'll get residual expansion to continue to test higher as well, even after we see a high put in. But just, the majority of this move was baked in back here over the course of, the past year, right, off the lows. And this is where, let's get rid of the moving averages and the Bollinger Band set here. This is where understanding that what we saw off the rally out of COVID, right? We saw a massive rally out. This was a downtrend, right? So this was, no, I don't want that actually. I want the arrow. So this was, the structural change we had with a little bit of an uptrend. We had equal lows essentially, and then lower highs to massively lower lows, right? Well, then we saw a lower high to higher low, and then we broke that lower high to create a structural change. So higher low reversal setup to lower high. And then after the character change, we had the first bear candle come in. From swing to swing, or wick to wick, we saw that after hitting some key areas over here, right, off of this structure in terms of closing basis, around the 115 area for the monthly here, we came right back down to base off the high side at, 67, 68, right? Low side in and around the 57 to 55 region off the actual lows. So we didn't actually close below that low at 57.28, even though we saw a bunch of swings at 55. And this was telling us, and it told us back here in January with this close coming into February, if this holds up, this is going to solidify as a macro low, a major macro low. And now we have this fully confirmed with this downtrend break to the upside. So this is a massive macro low. And it was telling us this based off of, April of last year, March to April. So holding up in this area, then close opening right on that. Strong support, move right back to the upside. So, and when it comes to kind of what is happening overseas, we're seeing that, and we're going to see the realignment of supply as supply adjusts to account for what's going on in the region. And as the United States has just released a package through DFC, Um, I always get it mixed up. $20 billion for reinsurance. After Lloyd's sent out and indicated at the start on the 28th that they were going to be canceling within 72 hours. And then, of course, that slowed everything down. Obviously, the conflict itself slowing everything down, but that also played a major role in grinding everything to a halt. Now, as the supply chain readjusts, as many of these nations are readjusting where they're going to ship from, and it takes time to spin up the insurance side again and like do all the paperwork and get things rubber stamped. And then of course there's the security side of things in the region. As that situation develops, it takes time. So there's like lag time, and the reason that I say caution in and around the key levels on the chart, and you don't want to throw that chart out. You want to make sure you're paying attention to the key levels. Is we're going to see price move before we read about what's going to happen, right? We already know that there's, between Lloyd's and the United States, there's some pivoting going on where the United States is going to take and provide some relief in that regard on the insurance side and possibly security guarantees. I think that is a part of it. In terms of escorts from the U.S. Navy. And then possibly, maybe Lloyd's feels comfortable with that, and then they go after some contracts as well because now there's competition in the strait. What you're going to see in terms of price action, and I don't care what your opinion about this situation is, by the way, is that I've had a lot of arguments with people with a lot of opinions. My point about this stuff is that if you're looking at the chart is going to tell you with the way that money is moving, what we're likely going to see in the news next, especially if it continues up. News is probably getting worse. If we start to see we'll start to see the news get worse if we see things continue to head up in a more aggressive manner, right? But if we do see that it starts to retrace back down, then we're likely looking at a scenario in which we're probably going to hear positive news coming shortly thereafter. The money always moves first. Understand that. Chart is going to be the important piece here to get positioned correctly if you're trading these markets. All right. This is not a political statement. This is purely based on the way that money moves. So let's see. Yeah, I think that's it. Natural gas move off the lows, recovery, and it hit right back to the top side, the 330 area. Anywhere above there, we're looking 350 to 365. We actually need to see 365 taken out to go and test, the $3.90 to $4 region. This looks like it wants to, if it doesn't get above that 331 on a close, this is going to slow down and likely go sideways and back down towards, the 270 area and then 250 thereafter. But if we do see the high side structure here around 331, we're looking 350 to 360. Anywhere above there, we're probably looking towards that 390 to $4 area. We saw the close open right on it, and it's a 50% level. So let's go to traditional markets. I've talked about the rollover. Watch Dow. Well, Dow decided to choose the downside route, and we've seen a readjustment back from some of the rotation into these kind of boring stocks like your Caterpillars and your Honeywells and stuff like that, as they've gotten pretty large corrections. And then we've seen the corrections begin in tech, while we've seen that Dow gets pulled to the downside, and it's more magnified with the larger Forex, the way that it's calculated at the top end of the index. So when looking at NASDAQ, though, we're seeing the consolidation. If Dow continues down, we're likely going to see, and if it doesn't bounce aggressively, we're likely looking at NASDAQ plumbing the lows again towards that 24K region, 24.2 to 24.4 on the close. Anywhere below there, we're looking for 24 to the upper 23 area. And I would say 25K back to the upside. Then we're looking low 25,350 to 25,4, and then back into range up top. SPY is telling a little bit of a different story. This is a breakdown. This is the start of a rollover, but it's right into support again. And this area is going to be interesting to watch. So this is, that 670 area that I talked about, below 675. Look for 670 to continue to get hit. Anywhere below there, we're looking for the mid 650. I would say the 655 to 665 areas is likely going to be what we're going to be looking for pretty immediately thereafter. So if we look, if this is dropped around this low, you've got the highs over here around 665. And then right inside of this this structure and this downtrending structure over here, we have the 200s that are crossing, where you're getting a simple crossing over an exponential, which means that we're going to likely see this roll over right into it around the 655 region. So that's the picture that I would be looking for this to shape up in the same type of manner back to the 200s if that does get that continuation down to the upside. For SPY, it now has to regain 675 to stave that off, right? And to stave off continuation of expansion down towards the 200s. And and nothing really doing below 685, 686 here. It's bearish. So that's pretty much it. Next week's going to be interesting. So obviously I'll talk to you on Monday for the Macro Monday video. But over the weekend here, keep a close eye on what Bitcoin's doing as it comes into the weekly close. And CME Open, of course, is going to open before this actually closes, and we're going to get a time change as well. So be aware that next week there is I will try to get these out by 5:30, but I'm also recording after the close, which is going to be at 5:30 Pacific is typically when I put them out, 8:30 Eastern. But I'm going to be recording at 5 instead of 4 Pacific Standard Time, which is 8 Eastern. So that, with the time change, the videos might come out a little bit later, more towards 9 p.m. Eastern, 6 p.m. Pacific. Don't hold me to it. I'll try to get them out fast, but then I have to also upload them, and that takes time. So if you're watching on X, no matter what connection I'm on, it takes forever to upload videos. I don't know why. Maybe it's just rate limited. I've got, in any place that I go and upload videos from, on a regular basis, I've got fiber connection that can absolutely saturate. So it must be rate limited, but look for things around 5:30 to 6 o'clock next week. I'll try to increase the pace at which I record these, maybe even, speeding up my cadence or something. Now, I did want to wish you all a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please stay safe, especially in times like this. And prayers for our troops here in the United States and, anybody that's any innocents that are caught up in this conflict. So please stay safe out there and have a great weekend. Have a great morning, afternoon, and evening. And I will talk to you again on Monday for Macro Mondays. And yes, and you can catch me in the mornings on David's show, The Breakdown. I'll be there, scheduled for 15. Sometimes we'll go longer. Just kind of giving my outlook on the markets shortly after they open in the afternoon. So, and that's going to be at 12 p.m. Eastern, 9 a.m. Pacific. So go ahead and watch it. Check it out. All right. Take care. Talk to you soon. Landy out.